If you're thinking about buying or selling in the Greater Toronto Area right now, this could be the market opportunity you've been waiting for. While prices have dropped across almost every property type, we're starting to see some interesting month-over-month recovery signals that smart investors and home buyers need to know about. I'm about to break down the May 2025 numbers that show exactly why this market shift could work in your favor. According to the Toronto Real Estate Board's latest report, the GTA housing market experienced improved affordability in May 2025 compared to the same period last year. With sales down 13.3% and new listings up 14% year over year, home buyers are taking advantage of increased inventory and greater negotiating power. The Toronto Real Estate Board reported 6,244 home sales through their MLS system in May, while new listings reached 21,819. What's particularly interesting is that on a seasonally adjusted basis, May home sales actually increased month over month compared to April, marking the second monthly increase in a row. The MLS Home Price Index composite benchmark dropped 4.5% year over year, with the average selling price at $1,120,879, down 4% from May 2024. Now, here's something crucial I want you to remember as we dive into these numbers. Since we're going through a lot of data, be sure to pause the video when we reach a dwelling type that resonates with you. These videos focus on people who are looking at the market today and considering taking action. We concentrate on month-over-month data because we want to get a real feel for what's happening currently in the market. While year-over-year gives us the long-term view, our month-over-month analysis arms you to make the best possible decision today. Let's start with the big picture. The median price for all property types in May was $975,000. Year over year, we saw a decline of 2.4%, but here's the encouraging news. Month over month, prices actually increased by 2.1% from $955,000 in April. This represents a $20,000 increase from the previous month. New listings totaled 21,669, with properties spending a median of 26 days on market, though the average was 50 days. Detached homes. The premium segment. Detached homes, traditionally the most expensive segment, had a median price of $1,259,000 in May. While this represents a significant year-over-year decline of 6.7%, the month-over-month story is more optimistic with a 0.8% increase from $1,249,000 in April. That's a $10,000 monthly gain, with 9,499 new listings and 12,445 active listings. Buyers in this segment have substantial inventory to choose from. 2,750 detached homes sold, indicating healthy activity despite the high inventory. Condo apartments present the most challenging picture right now. With a median price of $595,000, this segment experienced both year-over-year decline of 6.3% and was the only property type to decline month-over-month by 0.5% from $598,000 in April. That's a $3,000 monthly decrease. Properties in this segment are taking longer to sell, with a median of 33 days on market and an average of 65 days. 6,225 new listings entered the market, reflecting the inventory pressure in this segment. Condo townhouses showed relative stability with a median price of $733,500. Year over year, prices declined 5.4%, but month over month saw only a minimal decline of 0.2% from $735,000 in April. That's just a $1,500 monthly decrease. This segment moves faster than condo apartments, with properties selling in a median of 28 days, though the average is 51 days. 1,550 new listings came to market, with 543 total sales and 2,028 active listings. Looking at these numbers, several key trends emerge. First, we're seeing month-over-month price recovery in the overall market and detached homes, suggesting the worst of the price declines may be behind us. Second, the high inventory levels across all segments mean buyers have unprecedented choice and negotiating power. For investors and home buyers, this creates several opportunities. If you're looking at detached homes, the combination of high inventory and modest month-over-month recovery could signal a good entry point. For those considering condos, the continued price pressure means you might find excellent deals, but be prepared for longer selling times if you need to exit quickly. The data shows that while we're experiencing year-over-year declines across all property types, ranging from 2.4% to 6.7%, the month-over-month trends suggest we may be at or near the bottom of this cycle. If you're finding value in this content, don't forget to like this video, subscribe to the channel, and hit that notification bell so you never miss an update. And if you know someone on their own real estate journey who could benefit from this information, be sure to share this video with them. Your support helps me continue creating valuable content for you. Here's what I recommend you do next. If you're serious about making a move in this market, book a call with me through my Calendly link. We can talk about all things real estate, and I can provide you with an in-depth analysis of potential home purchases and comprehensive home evaluations. As a licensed Level 2 agent, I can also assist you in getting a new mortgage or restructuring your existing one to take advantage of current rates. Remember, each neighborhood and market segment has its own nuances. In today's market, working with someone who brings expertise, the right tools, and a strong network is essential. If you'd like to get a better evaluation of homes in your city, book that call with me through my Calendly link. The key takeaway here is that we're looking at the dominant dwelling types to see which ones were affected most and which ones could have the greater impact on pricing moving forward. With borrowing costs lower and average selling prices down, homeownership is more affordable this year compared to last year. Stay savvy, stay informed, stay knowledgeable, and until next time, may your investments flourish and your dreams of homeownership become a reality. Catch you in the next one.